If you think the rotation into cyclicals is over, you're wrong. Let's visualize the breathtaking cyclical rotation trade today. Hey, I'm Luke Downey. I am going over our latest big money insights, and it is a beauty. We have been all over Wall Street's biggest trade of the year, and that's the rotation out of big cap tech and into smaller caps. So the first chart I want you to look at, this is taken from July 5th. This is before the big CPI print where inflation basically confirmed that the Fed's job is done. They can start lowering rates. S&P at that time was up nearly 17% year to date. Here's a chart. But here's what people were concerned about. 20.5% of stocks were outperforming the index. Basically a record low. The average stock, right? So if you're looking at your portfolio, wondering why your stocks are not keeping up, the average stock, 500 stocks, was only up 5.22% versus the overall index. So basically, when you look at that index, a few handful of stocks were responsible for the lion's share of gains. Now, this one is looking through July 31st, all right? So just a handful of days later, S&P is basically at the same level, up 16.7% year to date. But look at the improvement. This is the cyclical trade, folks. 1/3 of stocks were now outperforming the S&P. The average stock, get this, is up 9.45%. So basically the S&P was flat, but look at the big difference in the average stock. So this is that big catch-up trade that we've been talking about. And it isn't going to stop. And here is the first thing you need to look at. Where is the money actually going? Here we are looking from July 10th through July 31st. This is 3 weeks of data. Look at where the performance is in the small cap sectors versus the S&P 500 sectors. So this is where it's key, right? This is where you want to be focused. Financials in the small cap space are up 15%. Comm services is up 15%. And discretionary is up 13%. And industrials are up 12%. So right there, compare that to these sectors in the S&P 500. Financials way below. Comm services, big cap tech, down 7.5%. Discretionary down 2.9%. This is where the rebirth is. This is where the money is flowing. And obviously, let's point out info tech, right? Mega cap tech down basically 8% in this big rotation trade. So a lot is going on. When you look at the big money index, which we live by, you can see it is heading higher. It's not heading down. And why is it going up? It's because of the inflows going into small caps. Okay, don't focus on the Mag 7. Focus on the rest of the market. That's where the love is going. Last but not least, we have said this multiple times. I know it's not popular, but you need to see this. Forward returns when the Fed cuts rates, we know they're going to be cutting, and the economy's not in a recession, then or 12 months later. Check this out. Since 1991, here's what happens to the S&P 500 large caps and the Russell 2000 small caps. 3 months later, the S&P is up 5.7%. Russell 2000's up 8.7%. 6 months later, nearly double digits for both. 12 months later, they've never been lower, 14% for the S&P, 17% for the Russell 2000. And if you're bold, if you're really bold, right? We're in a rate cutting regime that's starting soon. Look at this. Never been lower in this time frame, 100% win rate. S&P's up 26, Russell's up 36. These are the times in these sell-offs, in this high volatility. Don't freeze up. Look for great stocks that are on sale. This is how you win. This is what we're telling everybody to do that has a subscription with Map Signals. Remember, like and subscribe to our YouTube channel. This is all you need to know. See ya. Bye.